views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. I feel like we've gotten back to normal Houston weather. It rains every day between 1 and 3. Things feel like normal now. It's hot and humid. This whole 100-degree heat was just woo. So I hope you guys enjoyed the weekend. Back on the show today. This past weekend, Saturday and Sunday, had a great time, just kind of relax and hang out. So it's kind of nice. Got to do a lot of reading. Man, I get sent a lot of stuff. I get sent so much stuff. I swear Gary Vaynerchuk watches this show. I swear he watches this show. There's a YouTube video out now. I have not had a chance to watch it, and it says the more money you make, the fancier you get. In other words, the more complicated you make things. And my suspicion is when I watch the video, he's going to say, hey guys, there's only a handful of ways that it really works in business. Give you a great example of this. I've had some conversations with some folks over the last couple of days. I'm actually having one now via text message about a handful of real estate investors that have the new way to buy houses and build wealth. The new way, the new secret. There's always a new secret. What's the secret? If you know this one trick, this one secret trick, you too can be a zillionaire. And it's not just real estate. It's health and fitness. It's the finance industry. It's your career. If you know this one thing, you'll be wildly successful. And it plays on, you know what it really does? It plays on our fears. It plays on the scarcity mentality. Now, are there multiple ways to be successful? Absolutely. But there's not 1,000. I found the one way, the one secret. Whenever somebody says that, my BS filter immediately goes up. I mean, it's a pretty high filter already, but I have a wall that just goes straight up. Let me put it to you this way. I have not met a single successful person that after getting to know them, and professionally and personally, over the last 5 years since we started Houston House Buyers and Right Path Real Estate a handful of years ago, I've had the opportunity to get to know a lot of folks personally and professionally that are very, very, very successful. And I'll tell you what, not a single one of them over dinner or happy hour or steak dinner or just a couple guys hanging out, I have never heard any of them go, hey Jason, I got to tell you, man, I was doing okay before, but then I learned this one secret, and I am like, that's how I became wildly successful. Now, some people would say, well, Jason, of course, they'd never tell you that one secret. And I'm like, yeah, they would, because these guys tell me just about everything. The reason they don't do that is because it never happens. There's never the, oh, man, I was doing okay, or I was struggling. And then I learned this one secret. And it, boom, blew my business up tenfold, bro. I've never had that happen, ever. Maybe I will someday, but I haven't had that happen. The only success that I know is doing the right things at the right time and doing them over and over and over and over again. And over again and over, and do more of it. There's no, if you want to say that there's a secret to success out there, I'll give it to you, and it's called hard work. And it doesn't matter what you do, you're going to have to work hard. can you get a really smoking hot deal? I saw one this weekend. I'm a member of a bunch of different Facebook groups. And this guy was on this private Facebook group bragging about his last deal, which I'm all for. I mean, I don't care. You brag about your deals. It's not. Now, I will tell you this. You start bragging about your success, it is for, I'd love to tell people, it's not for me to judge. But when you start bragging about how successful you are, or you start showing case studies, you're opening yourself up to a world of criticism. And I'm totally okay with that. So this guy starts bragging about this deal he did. He was out in California. $1.6 million house. He made about $800,000 on it. I think it's about high sixes. I can't remember. It was Friday night when I was reading it. And what you realize is the guy just lucked out. I mean, straight up lucked out. Now, here's what I know is going to happen. That deal is going to be a case study for this organization for like the next 10 years. It's going to be great. How to make, $800,000 on one deal. Can you do it? Sure. Is it scalable? No. That's one of the things that we're all about here is scalability. Can I repeat the process over and over again and get the same result? Here's what I know in Houston, Texas. You can buy rental properties with leverage, meaning a loan, and make about $300 a month in cash flow. Here's the other thing I also know. Based off historic trends, Houston, Texas should continue to appreciate anywhere between 7 and 8% a year. And on a $150,000 house, that's going to put about $10,000, $11,000 of appreciation into that deal. Is that scalable? Yes. Yes. Right now, what is today? July 9th, 2018. There are literally tens of thousands of houses. Heck, if you want to get into the larger market, hundreds of thousands of houses out there that you can quite literally build a multi-million-dollar portfolio with. But I will tell you this, that window is closing. It's not going to be like that forever. The median home price continues to increase. In fact, the houses are appreciating faster than rents are. So at some point, the houses will have increased in value so much you will be unable to cash flow them with a loan. If you are renting that property out, that's just the reality. And truth be told, Houston's the fourth largest market in the United States, just behind Chicago. One could argue we're actually bigger than Chicago, but I'll give it to you guys. Chicago, LA, New York. Can you cash flow rentals in those markets with a loan? And the answer is absolutely not, unless you are in the worst sides of town in those markets. So how much longer are you going to buy single-family real estate in Houston, Texas, that cash flows and produces really great rates of appreciation? It's not going to last forever. I got to tell you, Houston, I think, and Houston, I'll say this to Texas as well. Y'all are a bunch of spoiled brats. I'll tell you that right now. You have no idea what the rest of the country is like. You really don't. You pretend, you kind of do, but you don't. I teach all over the country. I'm on webinars all over the country. I speak in front of groups all over the country. I got buddies of mine that invest on each coast, coast to coast. I know some guys that do it in Canada. Here's what I'll tell you. You're spoiled in Houston, Texas. Because even our worst deals are 10 million times better than any other market out there. It's not even close. I was speaking at the Landlord Workshop Monday night just for like 2 minutes. I got up on stage. I had a bunch of people before I got on stage said, hey, I saw the last Landlord Workshop. That was one of the best presentations I've ever seen on how the market works in single family. And I got up on stage and I did a 2-minute review of that presentation. And basically I said, hey guys, this is the great question to ask. How many of y'all have been in real estate for at least 5 years? And a lot of people in the room raise their hand. It's a really good group, this landlord workshop we put on. And I said, that's fantastic. I said, how many of you guys regret buying houses 5 years ago?
2 minutes.
And one or two people may raise their hand. Bought a bad deal, maybe a bad flip. How many of you guys, and then I said, okay, great. How many of you guys regret not buying more houses 5 years ago? And everybody starts laughing and everybody puts like both hands up. Even the vendors in the back of the room were like, we were buying houses and I wish we sold everything we owned and bought even more. I mean, just, you will say that 5 years from now. 5 years from now, you'll say, man, y'all remember back in 2018, we go to A-Leaf and we could still buy houses for less than $150,000? You're going to talk about certain sections of Katy. Actually, I can see it. I'm thinking about going in and buying some of these houses retail because the values have dipped a little bit from Harvey. I can already see it. And in that area of town, I know exactly what I'm going to say. Somewhere between 5 and 10 years from now, this is the conversation. Geez, y'all remember y'all could buy these houses for less than $150,000 retail? They're now almost $300,000. That's going to happen. These will double in value. You got to think the median home price in Houston's, I'd have to look at the most recent report, somewhere around $240,000. Why is that? I can tell you one of the reasons why it's so low, I think that's low, or why it's not higher, is because there's still some of these properties out there that are in good neighborhoods that are catching that appreciation curve. And you'll see, give it another 4 or 5 years, they'll go from 140, 160, 180 to 10. It'll blow your mind how fast that happens. And you don't have to go to these crazy area town. You don't have to go to the crazy, like, east side. We're going to get into Edo, and although I keep hearing Edo is the next thing, and I'm still not buying it. You got to go into Edo, and I got to go in north of, the Hardy Yards, and I got to go in all these areas. No, you don't. You go to the areas that have been good for 20 years, and you buy them there. Get back from break. I'm going to start talking about the rule of 25 today. It's Jason Bible, Right Path Real Estate.
Mic's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investment mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Taxes.
1 minute.
Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back, Jason Bible, Right Path Real Estate. Rule of 25. This comes from my favorite post on Mr. Money Mustache. Yes, that is a real blog. It is titled, The Surprisingly Simple Math Behind Retirement. I was chatting with a couple of guys last Monday night, week ago from today, and we had a real fascinating discussion. I shared this on an email, and if y'all want, I'll email this out. The email is called Retirement Impossible. Kind of like Mission Impossible, but instead of mission, it's retirement. Get it? It's kind of... Anyways, it was my lame title I came up. At some point, we will hire somebody to do all of our copywriting. Because I end up writing some of these emails. Veronica does it, and it's like totally a side job of ours. So at some point, we will hire a professional marketing person. But until then, you'll have to deal with my grammar. Let me put it that way. So the fascinating thing about retirement, and I was one of these guys that had spreadsheets upon spreadsheets. This one references this cell, and if this happens, then we'll make this money, and this is how much we need to retire. And I read this blog post by Mr. Money Mustache, The Surprisingly Simple Math Behind Retirement, and the number was pretty darn close. It's a rule of thumb, if you will. Now, everybody's thumb's a little bit different, so take that with a grain of salt, but it's a rule of thumb, and here's what the rule of thumb is. Take your annual expenses. Now, before I go on with the rest of the formula, I realize a lot of people don't know what their annual expenses are. You might want to figure that out. I'm just pro tip. If you want to invest and you want to retire early and you want to be financially independent, you have to know what you spend every month. If you don't know, that's a problem. Here's what I'll tell you right now. You can never out-earn your spending. It's impossible. You cannot out-earn your spending. Johnny Depp is learning this lesson right now. He made $650 million during the peak of his career, and he is broke. $650 million, arguably one of the most successful actors on the planet. He made $650 million, and he is broke. You can completely outspend your ability to earn. That's why you've got to know what your household budget is. It's the most important. Somebody comes to me and says, oh, Jason, I'd really like getting real estate investing. Credit's decent, but I don't have any money. How much money do you make a year? I don't mind asking people that. I used to be real, that's, I grew up in, obviously down here in the South, and that's one of the things that you don't talk about, right? But now that I've become, this real estate investment kind of guy, and people ask me all the time, what should I do? I just come right out with it. Because let's just cut to the chase. What's your credit score? How much money you make? What you got in the bank? You give me those three answers, I could give you a pretty good idea of what your next 5 years is going to look like. If the answer to that question is, I don't have a job, I got $10 in my checking account, and my credit score is a 9, I'm like, okay, well, we got some problems we need to fix. Here's the next 3 things you need to do. Now, if the answer to that question is, I've got an 800 credit score, my wife and I make about $2.25 a year, and we've got $1 million sitting in a checking account, not including all of our IRA, that's a completely different discussion. But the reality is we got to start from somewhere. And when I talk about retirement, the rule of 25 from Mr. Money Mustache's blog, we start with what are your annual expenses? And I'm amazed that most people don't know that number. You ought to have that top of mind. It's right there. This is how much we spend every month. Because here's the problem. When I start breaking down that rule of 25, if you don't know what you make, not what you make, what you spend, nothing else really matters. To Johnny Depp, does it matter that he spent $1 billion or $1.5 billion when he only made $650? It doesn't really matter at the end of the day. Now, if Johnny knew, hey, this whole thing runs on $1.2 million a year or $100,000 a month. I make $650 over the next 20 years. I'm going to be okay. Problem is, Depp didn't know that. Now, of course, there's all these lawsuits between him and the guys who used to manage his money and his attorneys and all that, debating this one issue. That's really what it comes down to. If you want fascinating case law on rich people screwing up, I love this kind of stuff. Not because the rich are, quote, getting theirs. I like it because it's so relatable to middle America. And it's public, so we get to kind of see what's going on behind the scenes. All the lawsuits right now between Johnny Depp and his former managers and the money managers and attorneys and CPAs and all that is this one issue. Hey, guys, how much am I spending? I mean, he hired a whole team of people. Now, don't get me wrong. He's had all kinds of other issues. It's not like he's this astute money manager, that sort. But I'll tell you this, he's not an idiot either. He's obviously highly talented. He's not stupid. However, nobody ever sat down and said, hey, Johnny, you want to retire someday, or maybe you don't. But what's the number? Well, hey, guys, how much do I need to retire? Doesn't matter if you play sports, you're a famous actor, you win the lottery, the number's the same. How much do I need to retire? Because at some point, I may not be able to work. I mean, that's important, right? I mean, look at the lifestyles of the rich and famous. That happened to Christopher Reeve, right? Couldn't work anymore. That can happen to you as well. So what we've got to figure out is, what are our monthly expenses? What are we spending every month? Let's say it's $100,000 a year, which is, I don't know, $8,500 a month, whatever the number is. Those are my expenses, $100,000 a year. Great. The rule of 25, you multiply 25 times 100,000, and that's what you need to retire. 2.5 million. 100,000 times 25 is 2.5 million. Pretty neat. And if you're someone And I'll tell you this: the funny conversation we had is I was chatting with one of the members in our group, one of our base camp members. We're chatting about this Monday night. He said, "Jason, I called two buddies of mine that are money managers, and I asked them. I said, Bob, Joe, hey, you got any like rules of thumb? Like, how much money do I need to save?" And they were both like, "Jim, look, it's no big deal. You know the money side of it. I mean, you don't need our advice." They said, "Hey, if I was brand new, clueless, had no idea what I was doing," and he said, "This is how much I need to retire. I need to make, let's say, $100,000 a year. What do you think I need in the bank? Not in the bank, but in investments. You think I need, I don't know, 2.3 to 2.7 million bucks?" And they both said, "Yeah, that's about right." And then they forwarded my email to him. And they go, "Oh, this is genius." I said, "Yeah, this is exactly right." And they started reading Mr. Money Mustache's blog. It's 25, rule of 25. Whatever your number is, it's $30,000 a year, it's 40, it's 50, it's 80, it's $1 million a year multiplied by 25. That's what you need to retire. The math, it's a general rule of thumb. Could it be 22? Sure. Could it be 30? Yeah, but 25 gets you in the ballpark.
2 minutes.
25 will get you in the ballpark. So now the question is, we've got this number, the rule of 25. Household income, household budget is $100,000 a year. We got the rule of 25. Says I need $2.5 million bucks in order to retire. Great. What do I do now? Well, it's simple. Now we ask the question, what do you have today? You got $1 million bucks? If you got $1 million bucks, we need another $1.5 million. Uh-oh, there's a problem. What's the problem, Jason? Well, you're 55. You want to retire at 60. You've been working since you got out of college at 22. It took you 33 years to save $1 million bucks. And you want to retire in 10. Got a little problem here. Got a big problem. Yeah, but Jason, there's Social Security and I wouldn't count on that. I only rely on those things that I have control over. I do not have any control over Social Security. I really don't. We get back from the break. We're going to talk about how real estate is related to this rule of 25 and how it can be easier to retire than you think. This is Jason Bible, Right Path Real Estate.
Mike's off.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly
1 minute.
general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope.
Hey,
of work
Lewis,
so
that's
that
net
everything
wealth.
gets done. Train and maintain quality
At 2.5
crews so it
million's
gets
net
done
wealth.
right, and complete the work in a proper order so it gets done
So
fast.
$2.5 million in equity in real estate, $2.5 million in equity markets and bonds and all that other junk. $2.5 million in checking account. It's $2.5 million in asset value. And remember, that's less debt.
This is business.
So $2.5 million in debt is not included in that calculation, or is excluded from that calculation.
All right, Jay, you ready?
Yeah.
All right, hot mics.
It's Jason Bible, Right Path Real Estate. So got a good question from Lewis here on Facebook. He said, hey, Jason, that $2.5 million, is that in savings, passive income, or just wealth? Where's that $2.5 million come into? And it's net asset value. So what does that mean? $2.5 million, whether that's sitting in a checking account or in your Vanguard account. Is it in real estate? Absolutely, but don't include the debt. The debt has to be excluded from that calculation. You could have $10 million in real estate and have no equity, and your net worth is zero. That's very important. I run into a lot of real estate investors that teach real estate classes. Oh, you guys are going to love this. They teach real estate classes because, you know, they're experts in real estate and all that other stuff, and their and their net worth is practically zero because they have no equity. This is why I'm not a big fan of owner finance. Because in most cases, there's no equity in these deals. So what's your net worth? It's zero. Now, someone's going to say, what about the cash flow? What's cash flow worth? I mean, it's a really great question. What is cash flow worth? To me, it's the equity that's important. How much money am I making on the equity? If I'm making money, because really, let's back up. And we're gonna get real high level here. Making money off of the debt spread without any equity is not investing. It's not. Really, all you're doing is skimming some proceeds from the transaction. You've got to have equity. You've got to have equity. The biggest failure I see with investors that become really, really successful. I've met some guys that are wildly successful, and then when the crash comes, they're not. And I'll tell you why they're not. They don't have enough equity. If you don't believe my analysis, read Dr. Stanley's book, The Millionaire Next Door Revisited. It was the latest version he wrote before he passed. And the reason that book is so important is that he went back and revised what he considered how to calculate what a millionaire is. There were a lot of people who were, quote, millionaires in 2006 and 2007 because of phantom equity in their portfolios. They never owned that equity. I'm going to say this right now because it's going to shock a lot of you. Cash flow is not wealth. And I don't want to get into the technical reason why, because it take longer than this radio show to explain, and it would confuse 99% of the audience anyway. But let's go back to the rule of 25 because I think that's a really good question. What about passive income? That's a great question. Let's talk about passive income for a minute. When you look at the rule of 25, for every $100 a month you save or earn, let me say that again. For every $100 you save or earn, equates to $30,000 in retirement. Let's go through some math. Let's say I have a rental property. Oh, let's make it even more basic than that. Let's say I cut the cable. No more cable internet, no more cable TV at Jay Bible's house. We're getting rid of it. We're getting rid of the cable. It's $100 a month. That $100 a month is $1,200 a year. 1,200 times 25 is $30,000, which means I have to have $30,000 less in retirement because my expenses have been reduced by $100 a month. Does that make sense to everybody? Everybody cool with that on Facebook? Now, we can use the same rule of 25 when it comes to cash flow producing real estate. And this is where things get really, really fun. Because now you're able to calculate how much I need in net worth and how much I need in cash flow to retire. Here's a shocker, you need both. This is why a lot of real estate investors, even though they are, quote, successful, never make it to retirement because they don't understand they got to have both. You got to have cash flow, got to have equity. Have to have both. This is why most owner finance guys never make it to retirement. Got to have both. Let me explain this interaction. Let's say I've got a rental property produces $300 a month in net profit. Let's just use the term synonymously, cash flow. It's not technically correct, but that's okay. I just want to use this as an illustration. $300 a month in cash flow, profit that you can put in your pocket and take to the bank. $300 a month equates to $36,000 or $3,600 a year. Take $3,600 times 25. It should get you about $90,000 if I'm doing my math right. Let me check my calculator here. 300 times 12 times 25 is $90,000. So let me blow your mind here. Let's say, Lewis, you need that $2.5 million to retire. However, every single family house you buy that cash flows $300 a month means you need $90,000 less in retirement. How's that? That's $90,000. So at $2.5 million, there's a couple of ways you could calculate how much real estate you really need. Take $2.5 million and divide it by 90,000. That will tell you how many houses you need in cash flow in order to retire and not need all of that equity to go into retirement. Hope that makes sense to everybody. If you need enough if you have enough cash flow, you don't need the net wealth to retire. If you have zero equity, let me make a different analogy here. Let's say you need $100,000 a year to retire. Now, you can either go out and work, which is not retirement, you make $100,000 a year, or you can make $100,000 a year in cash flow. Bang, retired. You don't have to have equity to go to work every day. You don't have to have equity to have cash flow. You don't. You don't need equity to be successful. Short term. But in studying this and watching it over and over and over and over again, equity is what saves you in the downturn. Think of all of those investors, and there's a ton of them here in Houston. If you get to know some of these guys, some of them will share you how their portfolios were destroyed in 2008 and 2009. I had a really long discussion with an individual last week who's been in this business a long time, and we started just a very light discussion on real estate investors that he had known over the years that had failed. They were wildly successful and then literally like beyond bankrupt. I mean, it was like crazy ups and downs. And I said, John, if you could do me a huge favor, go back and look at all those guys' portfolios, talk to all those guys again, and ask them this one question. If you were at 100% equity, would you have lost everything? And I can tell you right now what the answer is. The answer is no. Meaning, how many houses would you lose in a downturn if you own them 100% free and clear? The answer is none. It's really hard to lose a house that you own 100% of. It's really hard. Equity is a risk management tool. This is why when you guys hear speak at a weekend retreat or a landlord workshop, or this Wednesday I'm going to be up in Dallas, I'll be on stage, or Tom will be on stage for 10, 15 minutes. We haven't even written what we're going to talk about yet, but it'll be awesome, I'll tell you that. And the discussion comes up with, well, Jason, when should I re-leverage my portfolio? And my answer is you shouldn't. Well, Jason, when should I refinance my portfolio? You shouldn't. Wait a minute, you think I ought to pay these things off? It's not a bad plan. There are people out there that will bash real estate investors that pay cash for real estate. These are the same guys that tell you that investing in an IRA or 401k is a bad idea. They are financially illiterate. When you hear somebody say that, just walk away. And here's why. It's the only way to manage risk in this business. You've got to have equity. Equity allows you to do some incredible things. Leverage allows you to do some incredible things. But be very careful with leverage. This is why I'm not a big fan of the alternative finance crowd, the owner finance crowd. Because in most cases that I see, the way it's presented to me by real estate gurus and educators teaching this, is it is a means to make money on a deal without equity. But here's the problem. You can't manage risk that way. Equity is your only risk management tool. And risk is really important when you're retired and when you're building your wealth. We get back from the break. I want to talk more about the rule of 25, this $2.5 million. We'll go from there. It's Jason Bible, Right Path Real Estate.
Mike's off.
Morning, JC. Hey, John. Hey, Tammy. Tammy, you're in Florida, aren't you?
If your
Remember.
insurance company
Morning,
is slow or
Brian.
non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
All right, 1 minute.
In your brick, doors that stick, or sheet
Yeah, Tammy, Boston's a whole different animal.
Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased.
Yeah, Tammy, I totally agree with that. And here's the other problem with Massachusetts, aka Taxachusetts. It's not exactly landlord friendly. At least I don't think it is. I haven't studied Massachusetts, but I can't imagine that it is.
Or selling you unnecessary peer work. But we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
This is Business 1110.
This is the last segment, isn't it?
Yeah, the last segment.
Okay, good.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Having a conversation right now on Facebook. A friend of ours, she was in Florida. Now she's in Boston. We're talking about being a real estate investor in Boston. What a nightmare. That's what I'm saying. You guys in Texas are spoiled. You're so spoiled. Try investing in LA, Boston, Miami, San Diego to a certain extent. Seattle's crazy. Like for long-term stuff. I mean, flips, I do flips in those markets. I wouldn't try and buy and hold anything. It's a totally different animal. It's bananas. It really is. Here's the deal, guys. Rule of 25. Take your annual expenses, multiply them by 25. That's how much you need to retire. You can offset some of that with cash flow from rental properties. here's what I'll tell you. Most of your rental properties going to have some equity in them. So it's like a double dip here. Here's the other cool thing about rental properties. You hold on to them long enough, your tenant pays them off, further increasing your equity. When you really begin to evaluate how to retire early, how to become financially independent,
2 minutes.
What you'll find is, as you take a look at the entire universe of ways to build wealth, that real estate is absolutely one of the best. It's one of the reasons why nearly 8 out of 10 millionaires do so with real estate. And that's what we teach here at Right Path. We teach how to build income by flipping and wholesaling properties, and we teach how to build wealth with rental properties as a buy and hold landlord. We teach all the systems, teach the different ways to buy, the different ways to sell, how to be a landlord, how to rehab them, how to sell them when you are ready to sell them. We teach all that stuff here. Go to rightpathrealestate.com. You can sign up there for one of our next free workshops. We've got a networking and case study event coming up next week. It's going to be an absolute blast where you can meet some of our members
1 minute.
and what they're doing in their business and how they're building wealth and income for their families. Go to rightpathrealestate.com. Like I said, you can sign up there. For those of you that are in Dallas this week, you can see Tom and I Wednesday night at Gillies. Get there about 6:30. Free food, free beer, great technical content with our friends over at Jet Lending and Texas American Title. So we'll see you guys there. It'll be a heck of a lot of fun. Can't wait to see you guys. It's a free event. Again, just show up. We'll be there. We got plenty of room for everybody. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
Excellent. Thank you, ma'am.
Welcome.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com